Flow HS, what's up? On MBio, if we break through 5, is there anything left? Yeah, I mean, there's a lot left, from where it gapped, but in my own personal journey, I don't really like shorting things that are that far down off the highs, because the problem with doing so is I see that on April 18th, the high was in the 1555, and then the pre-market high was in the 12s, and the intraday high for that day was in the 10s, and then you just have this really bad scenario if the stock starts to squeeze again. So I'd like to, when I'm looking to put on a trade, I always look at where my levels of risk are, and where my potential targets are going to be. And, if I see something breaking down at its lows and we have a shitload of upside, I definitely don't want to be anywhere near that trade. Chasing is very, very, very dangerous, guys. And it's not just something that everyone says for no reason. I mean, when you're shorting lows, the stock can squeeze. Like, for example, there's people that are shorting the lows on ARCI today, and we never saw a bounce, okay, but that's hindsight. So what if this thing started to go sideways and then ripped, like we see on so many others? People are looking to capitalize on a 10, 15, 20 cent move, and then what, they're ripped for $1? I mean, you guys see the float on this. So in hindsight, we could say that this never bounced. Okay, it was a great short opportunity, but it's just a poor strategy shorting lows, in my opinion. I hope that helps, Flow HS. I mean, if you have a bigger picture macro plan that's proven, follow it for sure. That's just my own opinion. Pro, what's up, man? Flo says he is short on MBio. Entry from 617 overnight. But he doesn't know whether to sell at 5 or hold it longer. Yeah, I mean, like I said, in my own personal trading, I want the risk and reward to make sense to me. I know that MBio is kind of, it's at its lows. It's near its lows. I see that. Let's see, pre-market on April 22nd, it did hit a low of 487. So it's near its lows. Still, we haven't had any real buying pressure in a while, and I would rather wait to see that buying pressure and to short into resistance. That's just my approach. The hack is back says he's not getting any younger on ARCI. That's funny. Yeah, ARCI, pretty insane. But I hope you guys stayed safe. Man, like I said pre-market, after this 778 area is reclaimed, this thing can go freaking nuts. It's at the 1 year. At that point, it'll break the 1 year high. And that's a huge opportunity to either go long, like a lot of us did, or stay away from the short side, until it actually breaks down and confirms that the move is over. You can use many different forms of analysis to figure out that a stock is breaking down. There's tons of indicators, but instead of talking about indicators, I like to use general price guidelines, right? Very simple analysis. There's a line in the sand on a lot of these stocks. Okay, now it's rarely a very clear, like, stands out at you, but today on ARCI it really was. At the open we had a spike, and then it washed, and it held VWAP. It reclaimed, then it washed again. Now, if you guys notice, we initially ran, from the time of the high to that initial wash was around $1 move, give or take. The next time it put in a high and washed, it was 50 cents. This is price action that I'm looking at. It's around 50 cents. Okay, we got to about $9, and then we washed to 842 area. So that's 50 cents. So right there, the range is decreasing. Okay, that's something that I'm taking note of right away. Yeah, no problem, Flo. Hope you're having a great week. So from the time ARCI put in its highest spike at the open and washed, it was like 90 cents. The next time it put in a high and washed, it was, what, 58 cents. Okay, so the range is decreasing there. You also see that at the open we had the biggest amount of volume. Okay, now when the range started decreasing, the volume was also decreasing. And then it put in a high, a new high at 956, and there was some divergence there because volume was actually lower than the last two highs and pullbacks, despite price being higher than the last two spikes. You guys see that? Okay, these are all things that I'm watching. After that, as you guys can see very clearly, the stock absolutely collapsed. Now, this was very dramatic. It can be an argument here of some pretty heavy dilution. But, you know, taking dilution and all other forms of analysis out of the equation, you guys can see a clear indication here of weakening price action. And that's what I really want to focus on. So you can have any theory you want about any stock, or you can say that there's dilution, that there's not. It's a great company, it's a terrible company. Okay, but price always leads the way. Price is telling me right away, yes, it is spiking, but this is not the healthiest action. You know, and until it shows me otherwise, I'm really not confident that this is going to continue into 11, 12, 15 area. So, opening spike on volume, great. As I mentioned pre-market, if we can get past this $8 area, we're at all new highs on the year, on the 1 year. You know, sadly enough, that's what most traders are just really stop looking for, is just the 1 year. It's like, oh, it's breaking out on the yearly. You know, they may not go back and look at the 2 year, 3 year, 5 year and see, well, it doesn't really have a whole lot of room to run because there's really heavy resistance, whatever, 50 cents above that. You know, so we have to remember that in our own analysis, we have to be thinking about what other people are looking at. So on the 1 year, there's an argument to be made, okay, after this $7.70 to $8 area, as I talked about in pre-market, area can be reclaimed and broken through, this thing can really run. So it starts to do that, but it doesn't do it with purpose. You know, we saw a spike to 850, really deep pullback. You know, as you guys saw, the price action was very wishy-washy at the open. We did have that big spike, but it immediately was sold into, and there's a lot of profit taking. You know, when you have a stock that's up this much and it's the main play of the day, there's going to be profit takers from the back holders or from the people who bought pre-market, or whatever the scenario may be, you know, bought after the recent reverse split. So there's a few different situations here, but we don't need to know exactly where they bought. All we need to know is that price action is telling us right away, okay, there is a lot of selling into this spike. Okay, we don't need to know why we see it. Okay. Then it puts in a lower high and fades even bigger. Okay, so but I'm still not convinced that it's a short. There's a reason for that. You guys know I talked about the trapping aspect a lot. So price put in the 850, then it put in the 848, and it faded big. Well, what do you think all the shorts were doing? They see a freaking double top. They see it break below that $8 area. Of course, they're shorting into that. Very poor strategy, dude. In my opinion, very poor strategy. Then what happens? The stock fails to die. It holds the VWAP area, goes sideways for 2 minutes, starts to reclaim. Remember the float on this, so we know that, you know, the moves can be pretty dramatic. And, you know, they wipe the book on all these people that shorted into that double top or that breakdown on 8 area into new highs. Very typical. We see this all the time. We see it all the time. That's one of the things that we talk about most inside of the room is identifying the short traps, because they can really help you in your trading. You know, if you're early and you get steamrolled, like we all have, we've all been victims to being on the wrong side of a trade, right? So it's important to talk about it and identify it. So why was I not convinced that this was a great short at the open? Why did I say pre-market be very cautious on the short side? So first step, relative strength. Okay, we are at or near 1-year highs. So if price can break out of that, why are you shorting? Why? You're trying to pick the top. I mean, if you look back, there's really not a whole lot of resistance above this. Then we have a big gap fill. Okay, why short that? Right, so as a short seller, and experienced short sellers know what I'm talking about. There are going to be easy short trades and there are going to be hard short trades. And it begs the question, why would you want to make life any harder than it needs to be? Right? So if you can just wait for the breakdown and the crack, you can make a lot of money being short. I mean, look at when this thing actually died. Same thing with MTP yesterday. You know, same thing with a lot of these. Bio, for example, recently, since we're talking about that. Once these things crack and you have actual confirmation, there's a lot of money to be made on the short side. And you may still get in trouble by being stopped out if it starts to squeeze, but the likelihood of you getting squeezed on the backside is far less. Okay, that we know. So, of course, nothing is 100%, but the likelihood of things returning from the dead after they've broken down is far less than it would be shorting at the open on a 1-year breakout, you know, with pretty good volume. You guys see how there's a path of least resistance? And I know a lot of people are saying, you hear it being said all the time, don't look for the path of least resistance. You know, well, in the trading world, I would argue that that's the path that you want to look for. You know, not when it comes to work ethic. You want to put in a very large amount of work and tracking and studying into your analysis. But when it actually comes to your executions, you don't want to make life harder than it needs to be. We all know, we've all fallen victim to the fact that these things can recover and squeeze many times. Like it's like rinse and repeat. You know, they fade. All the very inexperienced short sellers are trying to smoke the bid, and then it stalls and goes sideways, it reclaims, and you never really see any form of actual breakdown. So what you see a lot of times with these short chasers is they'll short it, it starts to stall, then they're covering, okay, get out. Well, great, thank you, you're spiking the stock now. And then the longs see that the stock is spiking, and then they hop in long. Now the stock is really moving. And then the other shorts that still are a little bit higher but haven't really waited for an actual breakdown, now they're panicking out. You guys see how this all makes a market here, both sides of the trade? So I feel like it's very important to identify when we actually have weakness. Now, how do I identify that? Well, I'm looking for volume. That's a key indication for me that, the move is very strong or it just can't sustain itself. It's really hard to argue with volume. It's really hard. It's not like a traditional indicator of price, right? It's really hard to argue with volume. So that's a key indicator. And then price action, like I said, we had this double top action, a sell-off, but we never really broke down and then tested that area successfully and then went lower, right? We just had a wash, and that's definitely not enough for me. So I need a wash, pretty large wash actually, given that this stock opened up around $8, for it to wash 40 cents to 760, that's really not a whole lot of selling pressure for me, considering that yesterday it closed at 483. So we have some range here, right? And I want to see that range continue. So that's where I get into the range analysis, which I did not see. I did not see healthy range. I started to notice that at the high, initially at the open, 850 washed down to 760. Then we put in a new high, and then it tested that 850 area. But guess what? That was almost half of what the first, let's say, 5 minutes range was, right? So you see it coming down here, and then you also see a decrease in volume. So originally I'm thinking, okay, I would not want to be short at the open on something that's breaking out of its 1 year high, unless I see some very heavy resistance above it on a 2 year, 3 year, 4 year, 5 year, etc. I didn't see that. So I'm like, okay, this is definitely not an optimal short at the open. Want to wait for it to break down. Now, of course, as a trader, especially an intraday trader, your opinions are going to be constantly changing, as they should. My game plan at opening bell may be much different than my game plan 5 minutes after opening bell, as it should be, right? We let price dictate our game plan. We let price lead the way. Or tape if you read tape, or in indicators if you're big on your set of indicators, volume, lots of different things, right? So saw the double top area, saw the wash. Of course, that's very basic form of analysis. I need a whole lot more than that. But people are shorting into that. Lots of people were shorting into that. I mean, we see the aggressive short squeeze shortly thereafter. But, then there's the divergence. There's the third step in my approach. I'm saying, okay, yes, we do have an argument here of relative strength because we're at all-time highs intraday, but there's not a whole lot of volume to sustain this move. In fact, the volume is decreasing. It's getting smaller than the last 2 times that we saw a spike. So if you guys want to mark down on your chart what I'm looking at, opening spike is 850. Washes to 760. Note the volume. Then the next spike, $9. Washes to 842. Note the volume. The next spike, 956. then there's no bounce. There's no bounce to draw from. But note the volume. Okay, there's an argument to be made here that there's very big decrease in volume. So on the opening 1 minute candle, I see roughly 800,000 in volume. Okay, 800,000 in volume at 850 a share. On the next spike, let's call it $9 a share, 50 cents higher, but the volume is now 700,000, 710,000. Now, let's continue. New high of day, 956, right? The volume is now 330,000. Do you guys see the divergence there? Let me know if you guys see what I'm talking about. This is very important. I know a lot of you guys logged off after you saw the infinite dump on ARCI, and really nothing else moving. There's not a whole lot of reason to stick around right now, but that's one thing that I'm looking for. So my analysis is broken into pieces, right? I always want to look at multiple forms of analysis to prove a thesis. Realist, what's up? What time are you at on the chart? What do you mean, my time zone? Or the time that the time of the analysis? Well, you can see that ARCI is the stock that we're talking about. 941 would be the high. 936 would be the second push, and 930 opening bell would be the first push. So 930, 936, and 941. I'm in Chicago time, so it'd be 8 for me. But yeah, 9 Eastern Standard Market Time. Realist said he missed the divergence I was talking about. No problem. So I'm looking for clues to tell me that price is weak. Okay, despite its price action, I want to see volume, right? Because if volume makes the market, right? So if there's no volume, price can't sustain itself. If there's ample volume coupled with price, then you could see higher highs, buy the dip situation possibly, right? But if I'm looking to buy a dip, there's a few things that I need to be aware of, right? So at the open, 930, price put in a high of 850. At this time, on that first minute candle, there was 800,000 in volume. Then price puts in a new high. So we're looking at swing highs here before the stock pulls back. Okay, that's the swing high, the highest high before the stock pulls back. Okay, 850. Then $9 area comes into play before it pulls back, right? But at $9, even though we're 50 cents higher, volume is actually only at 700,000 for that 1 minute candle. Then it pulls back, and then we see a new high of day, which holds true as high of day, and that's 56 cents higher again. But what do we see? We see that at 956 high, 941 market time, prices in the 300s now, 320,000 330,000 volume. You see how price is increasing but volume is decreasing? That's called divergence. That's one aspect of the trade that I'm looking for on all these trades. I'm really looking to see, can this move sustain itself? Okay, so I could see right away there's a big problem here. There's a big problem here. Now, it's not enough to short yet, but it's indicating to me that this move may not be able to sustain itself. So now we have a few lines in the sand, right? So we could say, okay, how can we create a trading plan off of this? Well, two areas of support, once they're breached, become resistance, right? So if support is breached, makes an argument that the stock is weak, it may be an area of interest to short around. So when I took the first step at the open, we washed to 760 area, right? Mark that on my chart. We broke to new highs into the second step. Then we washed to 843 area, marked it on my chart. But I'm also marking the tops of these areas. 850. This is how you draw support and resistance. 9. Well, at least this is how I do it. Okay. There's no one right way. Everyone's going to be a little bit different. Okay. It's kind of like art. It's what resonates with you. It's what speaks to you. It's important that everyone understands that drawing support and resistance is not an exact science. There's not an exact calculation where you can have a definitive, equation to get it to the tick. It's just not that way. And markets don't always respect things in fact, markets rarely respect things to the tick. It's more of an area or a zone. Okay, so I'm drawing the high of the spike, I'm drawing the swing low, I'm drawing the next swing high, the next swing low. I'm drawing 956, and I see when price comes back down to that $9 area, something very strange happens. We only bounce to like 923 instead of putting in another high of day. You guys see the pattern here? Put in the high, retrace down, we broke the high, then we retrace down, which also happens to be the previous high. Great. We broke the high again. This is all front side price action. Okay, 956 hits. I already see there's something very wrong with the volume divergence. Comes down. Tests the previous high as it did before, but something's different here. Okay, it's going sideways. There's not a whole lot of buying, and we're definitely not breaking into new highs again, right? And we're starting to creep lower. We're creeping, it's fading. I see volume has dropped off a cliff. Right now I'm thinking, okay, this is very dangerous. This is very dangerous to be on the long side. If you bought that, very dangerous. And of course, other people are looking at that too. There's a lot of dip buyers. They think that this thing's going to 15. God bless them. When they see that it doesn't, it starts to fade, go sideways, then we have the huge pull at 948. Okay? Now some of you are saying, well, there's no way to tell. Well, we had a pretty good indication that something was very wrong, right? I mean, we have ample volume, not the greatest, but enough to do business. We're breaking out of the 1-year highs. There's no real hard resistance above. This thing should go. Why not? You start seeing volume decrease despite the higher highs, and it's putting in higher lows. Okay, well, it's not enough, but something's off here. Something's off. Puts in the high, and it no longer bounces the way that it did previously. The volume is atrocious at this point, and you have a pretty good argument that this move cannot sustain itself. It looks like it's going to fail. Now, is there a way to tell that ARCI is going to go from 956 to 6 intraday? Not that I know of. I mean, I don't want to say no because I'm really not allowed. I have a personal rule for myself. I'm not really allowed to use the word impossible. It seems that every time I've ever used the word impossible, I got into a lot of trouble shortly thereafter. So I don't really like to use that word. I mean, I'm a data guy. I'm a math guy. I'm a statistics guy. And when you're a data guy, there's a huge no-no around saying never or impossible or 100%, right? Or it has to. It's very rare when we are able to conclude that something is 100%, right? If I stand up and I drop something, it's 100% going to fail and fall to the ground because of gravity. Okay, that's something that we can quantify. But if you don't have that data on the market, you can't say 100% that stock is going to do anything. We just have probabilities. And the more knowledge that we have and the more data that we can shop and more metrics that we have to prove our thesis is great. You can go 50, 60, 70, 80 percent win rate on some things because you have a large sample size that can prove that, yes, this really does work 75% of the time or more. But nothing is 100% in the market. It's just not. I mean, not that I've found anyway. So I hope that this has been beneficial to you guys. I'm going to keep it short and sweet. If you guys have any questions, you can ask me down below. Any questions that you have. But I hope that this has been insightful for you guys. This is my analysis and approach on ARCI. Of course, I'm also looking at fibs and other things, but I hope that this has benefited you guys, and you guys can see in the next trades, look out for volume, look for price action, look for continuation. You have to identify front and back side. So right away, I knew this is front side. It's not something that I want to be short. And, let me see if I can find that message from pre-market for you guys. There's a lot of chatter on this stock. Yeah, maybe we'll post it. But you guys can see. Okay, so what I'll do right now is I'll post it. I found it. So in pre-market, I outlined, I mean, this is not hindsight. So in pre-market, I outlined 3 minutes before the opening bell. ARCI, no resistance above, I would be very careful shorting. So I already knew right away this is not an easy short. Now, of course, this thing died huge. People are like, Micah, this thing died huge. Okay, how often do we really see this happen? This is not organic price action, okay? This is not, it's kind of not really able to sustain itself, looks like it's going to fade. No, this is very dramatic selling. It halted, and then it unhalted and it gapped down. After that, it continued to sell. It went sideways, absolutely no area for a bounce. Then it spilled out even bigger. Now it's sideways again. It spilled out again. And now it's sideways again. I mean, it's absolutely nasty. There's so much unloading into the stock. It's not even funny. It's not something that we can identify with price action alone. So price action has told us that, okay, yes, this is weak and this is no longer a front side situation, but there's no indication of price that can tell you that something's going to go from 9 to 6 inside of 2 hours, right? So this is an anomaly. This is what we call an anomaly. in data. It's rare when you see these things happen, but it's great to see them because it can help you prepare for next time. So there should have been no bouncing on the long side after the line in the sand was broken. You also had the volume divergence. Okay, everything was telling you, hey, this is not able to sustain itself. This is, when I'm looking to go long in a stock, I want higher highs and higher lows. So when this stock failed to put in a higher high, and then we broke below that swing low, coupled with the volume analysis, something very wrong here. Okay, guys, I hope you enjoyed this. I hope that it has benefited you. Like I always say, this is not the right way. It's just my way. It's just my non-professional way. It's just my opinion. And I'll continue to share my analysis one stock at a time with you guys. And I hope that you enjoy it. So this has been recorded. We're going to throw it up on YouTube for the peeps. And yeah, no problem, Kevin. Nice to see you. And we'll be back at it tomorrow. So if you guys have any questions, you know that you can email me, or if you right-click my handle or my name, you scroll down and it says message, and you can message me. Let me know how I can help you in your journey. Okay, guys, thank you so much for your time. I will be back later today.